SDG Finance Geneva Summit. My name is Sarah Bell and I work for UNDP and I'll be your MC today. We're going to wait, let's say, 1 more minute so everyone here joins us. Welcome to the online audience as well. We've got a great agenda ahead of us, including 2 high-level panels to discuss how to redirect mainstream capital flows towards the SDG in developing countries. But first, I'd like to show you a short video that we put together to frame some of the questions that we intend to discuss today. I'm just going to wait 1 second, and we can start.
There clearly is a momentum for sustainable finance and impact investing. Yet, we're still far from closing the financial gap required to achieve the Agenda 2030. Is this a reason for losing hope? I don't want to think so just yet.
That would mean that many of our life decisions, most of our business decisions, will include SDG impact component.
So with more money flowing to the SDGs, we could take care of the planet and fight the global warming. On the other hand, we could help a lot of people which don't have access to basic needs, such as clean water and sanitation, food, job, or safe environment.
The majority of the organizations I work with are social impact for-profit organizations. Global capital has the power to turbocharge these existing organizations to do more faster.
Sustainable and resilient and more inclusive development model is certainly possible if we are all able to mobilize private finance and to align business models and practices to the Sustainable Development Goals.
We need to replace and move from the concept of shareholders' interest to the concept of stakeholders' interest.
We need to rethink our narrative of financing the SDGs, from looking at it as mobilizing money for sustainable development towards embracing it as the 12 trillion market opportunity it presents. The SDG Finance Geneva Summit is doing exactly that.
We need to be more innovative, and we need to have more financial tools regarding impact investing, and we need to have better impact measurement data, better quality of data, so to make sure that the money is flowing in the right direction.
We need to adjust the metrics that global capital uses for decision-making and asset allocation to prioritize social impact metrics alongside traditional return on investment metrics.
We must set a new course to achieve our 2030 ambitions. We need to change the way we do business and support private sector and investors in their transition to a purpose-driven approach. In Colombia, the work of UNDP with the private sector, the recent SDG Impact Investors Map, and the growth stage impact ventures are opening a new sustainable development opportunities for the country.
One of the key reasons that the Building Bridges Week is so important and that the summit organized by the UNDP is so important here in Geneva is that Geneva and Switzerland are financial levers that are long enough to change the world.
Join us to accelerate the transition of finance towards the SDGs.
Join us to accelerate the transition of finance towards the SDGs.
Join us to accelerate the transition of finance toward the SDGs.
Join us to accelerate the transition of finance toward the SDGs.
Join us to accelerate the transition of finance towards the SDGs.
Let me turn now to our first 2 speakers and invite for some introductory remarks Ambassador Christian Frutiger, Assistant Director General, Head of Global Cooperation for the Swiss Agency for Development and Cooperation. Ambassador.
Thanks a lot, Sarah. Good morning, everybody. Distinguished ladies and gentlemen, dear guests, dear friends. It's a big pleasure for me to say a few opening remarks on behalf of the Swiss Agency of Development and Cooperation. 2 years ago, in September 2019, the UN General Assembly proclaimed the decade of action to deliver the SDGs. It did so in order to accelerate efforts to deliver on this ambitious agenda we are all so much striving for by 2030. The urgency became even more evident with the climate emergency. We have heard about it, COP26 in Glasgow. With the results we know, but what is clear is that we have to accelerate. It also became evident that we have to move faster with the pandemic, which struck the entire world and which has really pushed us into questioning quite a few of the certainties we had before. The gap in actually reaching the SDGs has become bigger. So according to the OECD, we are now at a gap of 4.2 trillion in financing, which would be needed to actually achieve the Sustainable Development Goals. So, ladies and gentlemen, we've heard it time and again, business as usual is not an option. So we really have to move beyond that. What is needed is systemic change that encourages the public sector, businesses, the financial sector to invest into the achievement of the SDGs and the Paris Agreement. So the question is not why are we doing it, the question is how will we do it, what will we do, and really how fast will we do it. So a dynamic private sector is a key driver for reducing global poverty. Switzerland intends to harness this potential in its engagement in international cooperation and in its work with the private sector in its new international cooperation strategy. We have actually outlined this in a strategy and action plan on how to go about fostering and harnessing the leverage of a private sector in working towards sustainable development. It's also against this backdrop that we support financially this event today and, of course, the other events which point into that direction. Today, the featured Growth Stage Impact Ventures program fits really very well into these attentions because it addresses the lack of information on investment opportunities in developing countries, as well as on specific investment-ready enterprises aligned with the SDGs. So the Growth Stage Impact Ventures program is one step into the right direction. We are happy to learn that the results so far are quite encouraging. Therefore, I particularly look forward to the discussions we have in the next few hours, and then also the examples and discussions from Colombia, and of course, the talk and the explanation around the SDG investor map. With this objective of bringing together entrepreneurs and investors, this program is a true example of what Building Bridges is intended to do. Building these bridges not only between the financial district of Geneva and the UN and international organizations district, but also building these bridges between the North and the South. We have to look at what works, what doesn't work, where are the quick wins, where are the low-hanging fruits, where is the big potential to scale up, but then also we have to have the hard conversations. And those are not going to be simple. We've heard this week about this wealth of money that is available just waiting to be invested. But we have also heard, and there are trillions and trillions which are waiting to be invested. We've also heard that even if you look at the niche of blended finance and impact investing, only 6% of private sector raised funds actually go to the least developed countries. So only 6% of even blended finance and impact investment go to the LDC. So there is a huge delta between the amount of money available to be invested and where it actually goes. In other words, the global north is investing in the global north. We are investing in ourselves. And this is something we really have to now tackle. We have to start believing into investing in the Global South. This is the path towards achieving the 2030 agenda, but this is also the path towards achieving a sustainable future for all of us. So we're taking first steps here. I look forward to very concrete discussions, very concrete results, and then especially the hard work, but also the big achievements which come after the conference when we start putting things into practice and actually really direct investments toward the South. Thanks a lot. I wish you a good day, thrilling, fruitful, and concrete discussions, and I give back to Sarah.
Thank you, Ambassador, for those very inspirational words. Let me welcome my new boss, Aggie Veres, who is UNDP Geneva Director, for introductory remarks.
Thank you very much. It's really my pleasure to be here. And even though I'm new to Geneva, I'm not new to this forum. I participated a couple of years ago. And first of all, I would like to thank Ambassador Frutiger for his really matching words to the agenda that we are trying to promote, and for your presence and the continued support that we have with Switzerland and with the other partners that we work with globally. So I think what is striking all of us, even if you're not talking about in this conference every day, how much the world has changed over the last 2 years, so the last few years when we started this program. The objective of the program and the objective of our intervention haven't necessarily changed, but the complexity and the interactions needed for us to address these challenges that are in front of us, and the ambassador also mentioned, of unleashing this capital from the global markets to developing countries and to development challenges. It's so complex, it's so integrated, that the only way we can address this, if we ourselves take a systemic approach, that we're focusing on transformation, where we're not just finding solutions to a problem, but we're not just trying to address it through our traditional methods, but this means we also have to change how we work in partnerships. So building bridges, I think, is a perfect way of describing that we need to innovate also our partnerships. We need to look at how we promote the ideas. And one of the aspects to this is that we need to start talking to the unconverted. I'm sure all of you in the room, you're here because you're interested. You already bought into the idea. I doubt many of you are here because you need to be convinced today by the ambassador or myself. So what we need to do collectively is to have this kind of broader engagement that allows us to bring those on board who may be interested in investing in impact and taking the financing sources from the north to the south, but who may glaze over as soon as you start talking about emerging markets, private investments versus public investments and the north-centered investments. So I think that's why this program is so important, because our job as UNDP is to make those connections. Our job is to find solutions to development problems that are looking at new ways, because the old ways are not working, otherwise we wouldn't be here. So what are these new ways? We're talking about accelerating this progress. How are we going to accelerate that? And we need to look at the success stories there and look at them to see how we systemically can scale them up. And scaling up is not necessarily just in terms of monetary measurements, but scaling up in terms of having really a global movement that embraces this avenue that we are going down on. Now, just a few words more specifically about this program and what we are trying to achieve. Our flagship program is the Growth Stage Investment Ventures for the SDGs program that essentially is trying to address one of the, or a few of the elements that we talked about during the Building Bridges Week here in terms of why these financing sources and these trillions we're talking about, why are they not reaching the investors? So a few ways to address this. One is, of course, somebody needs to reduce the risks. And this is, again, a collective effort. But those risks are sometimes perceived, sometimes real. And we, in this kind of partnerships, are looking at the market intelligence, how we can provide the information for investors to assess what is perceived and real risk, and to what extent this risk can bring them the returns and the impact and so forth. So one of the things UNDP is doing globally is tying to very specific development priorities of national level governments and also local level, and trying to identify the investment opportunities within that landscape so that we are actually channeling the finances and the investments to the opportunities that will have an impact on the ground on the type of development challenges that's the most relevant for those countries. So we contextualize the opportunities, and we contextualize it bringing the three main things together: the impact, the risk, and essentially the return. The second way how we are doing it through this program is then how do we connect this local landscape and the platform that's being nurtured. We can strengthen, for example, in Colombia that you will hear, we can strengthen the environment and making it more ripe for investment. That's one of the very important things that this program is doing, working with the entrepreneurs, working with the local ecosystem. And we can advocate at the global level for the investors that there are these opportunities there. But the last part of this puzzle, and I think that's the hardest, is then how do you make the link? How do you connect then these global financing entities to understand the opportunities, to want to engage with these opportunities, to create an appetite, and then to work together so that the experience will be positive? And that's why we as UNDP and I think UN entities on the ground really need to do a little bit of a hand-holding, both with the local partners and both with the international community, and we can only do this in partnership with others. Individually, we're the UN, so you could say we're big, but actually we're very small when it comes to these issues. So the only way to do it is if we coordinate and if we cooperate with the different actors, because what I have also seen very clearly during this week, that everybody has a role, and it may seem as a crowded space, but actually there's a lot of work to do and there's space for everybody to do what they need to do. So with that, I think we are going to focus on the substance of our program here today. You will hear a little bit more on our approach and how we are progressing with the program. And then in the afternoon, you will see the Colombia example, which I strongly believe is just one example that shouldn't be taken as the etalon per se, but it's something that we want to learn from, and it's something that we systematically want to see how we can replicate it in other countries as well. Unfortunately, I think the most exciting part of our program was the pitching of the entrepreneurs, when you can actually hear from them, not just the pitch, but the process that they went through. Does this work, this process? And because of the COVID restrictions, this is something that we could not accommodate this time. But to reassure everyone that what we are doing now is not taking this as just an event, and we will find another way and another setup in which we can do this kind of pitching, and in fact, leveraging the technology and the virtual setting, hopefully we can actually engage in a larger audience and other examples as well. So very much looking forward to that discussion, and anybody who would like to contribute more, you're welcome to share your ideas with us. And I specifically would like to thank our partners who made this possible over the years and this particular event as well. I'd like to thank Orange and EPFL who make possible with their expertise and dedication the organization of this competition. And it's very important to note that this is about bringing the competencies together. It's not just about money, it's about competencies that we need in these partnerships. And our sponsors, the Swiss Agency for Development Cooperation, SDG, Alpha Mundi, Aliti, Ray, Storm, and Symbiotics. And we very much appreciate the steady and generous contribution of all of you that make possible the SDG Finance Geneva Summit. And of course, the wonderful and very constructive partnership with the Building Bridges Week community, which we feel an integral part, and we are looking forward to collaborating more over the next few months. Thank you very much.
So let's deep dive in that conversation. As Ambassador Frutiger mentioned, the money is not lacking. There are trillions of dollars in global capital markets. And as Aggie mentioned, we need a transformative approach to remove the roadblocks, to redirect these resources to where they can have a huge impact. And I'm going to welcome Karen Wilson, who is Senior Advisor at the OECD, and she's going to moderate that panel on accelerating the transition to sustainable finance for the SDG. I'm also inviting our panelists to join on stage. And I wish you a great conversation, and obviously we'll open the floor for Q&A.
Thank you, Sarah, and welcome to my fantastic panel here today. So on the panel, we have Aggie Veres, the director of UNDP, who we just heard from and we'll hear more from in this session. We also have Christina Tora. She's the Chief Market Development Officer of the Global Steering Group for Impact Investment, someone that we work with closely at OECD. We also have Veronica Scotti. She's the Chairperson of Public Sector Solutions for Swiss Re. Welcome, Veronica. And we're delighted also to have Eric Young. He's the CEO of Green Tech Capital Partners, and he can really give us the view from on the ground, working with the entrepreneurs, so the fun stuff. So we look forward to hearing from you. So we've already heard about the financing gap. We know that gap has increased over with COVID, and yet we know there's a lot of funding out there. But the funding, as the ambassador said, is not going to where it's most needed. It is going to emerging markets, but it's going to the bigger countries. Most of it's going to the north. It's the north to the north. And we're really not getting the money to the least developed countries and to the issues in the SDGs that are harder to fund. So in this panel, we may not be able to answer all the questions, but I hope we can make some progress. And so, Aggie, I wanted to start with you. We know that this financing gap exists, and you already addressed it, and actually a bit. And I really liked what you said, that it's about solutions, that we need to do things differently. And this is something I often see when people talk about innovative finance. They think the innovation is in the finance. And actually, the innovation is in the solutions and how you do things differently and how you partner, which are the things that you were talking about in your introductory comments. So I'd like to hear more about that, but I'd also like to know what is it that you think is behind this mismatch between supply and demand? What is it that you think we can do about it? And can you tell us a bit more about the work that UNDP is doing? Thank you.
Thank you very much. That's a lot of questions, but I try to be a little bit more specific now that I'm on the panel and not giving the introductory remarks. I think let me start a little bit with this mismatch of supply and demand. And there were specific sessions actually during the week focusing on that. So in terms of what can be done and what is the main issue where we can come in, there are various reasons, but what we are trying to do is address it at the various levels where the change can demonstrate itself so that investors and others will see the opportunity. One is about the information gap. So when you don't know, you're not going there. So you don't know what you don't know, in other words. You have to really present some of the opportunities in a way that investors can digest it. And the information gap is then coupled also with the narrative gap. We don't speak the same language, and we're getting there. But, we say investment, we say private investment or public investment, and then when, I say public investment, I'm talking about the governments. When an investor says public investments, they may refer to publicly listed investments. So these things are really hampering the narrative and communication. Then on the different levels, one starts with the governments. Governments need to have an intent. You can have, of course, investment promotion in general. what we are trying to be is to be advisors to the government so that this intent is translated into tools and methodologies and essentially a system that's underpinning the government interventions in developing countries. One of the specific tools we work on is the so-called INFFs, which is the Integrated National Financing Frameworks. And what it does, it's basically a policy framework that looks at policies on incentivizing the public financing going into the right areas, but it's also looking at beyond the public budget to have the right policy frameworks to channel the private investments to the right areas. And then you asked on specific UNDP interventions as well, or what we're doing. Then the second layer is then the private layer and the layer where the investments actually happen. And there was a lot of discussions about how you actually show the impact and how is the time frame of the impact, how is the time frame of the investments, and there's a mismatch between that as well. So what we're trying to do is link back to the measurement framework that we consider as a global standard called the SDGs. And those of you who may not know, the 17 SDGs are underpinned by over 200 indicators. So try to see that the impact and the way it's measured, monitored, and communicated actually links back to the development goals of the countries where these investments happen. Maybe I'll just stop here and I'll come back in as the conversation goes on. Otherwise, I can just go on and on about what UNDP does. And I think it's more interesting to hear from the other panelists as well.
Terrific. Thank you so much. And as you noted, there are a number of different gaps, information gap, narrative gap, the impact measurement gap, which I know we're going to talk about a bit more later, something close to my heart and many others. I'm looking at Christina. You also mentioned the importance of the enabling environment in the countries, and we can't forget that. And it's great that UNDP is doing work with the national governments to help improve the financing environment in the countries, because, of course, that really underlines investment. Another gap that you didn't mention, but I'd love you to comment on, is the perception gap. There are a lot of people that just assume that investing in developing countries is risky, when that's not necessarily the case. And maybe this is something more for you, Veronica, so we can hold this question or you can jump in if you'd like. Why don't you? Yeah.
Thanks, Karen, and thank you. Can you hear me? Yeah? Thank you for having me today. So I love to build on what Aggie just said about the structural approach, but can I take a 30 seconds back and build also on what the Ambassador Frutiger said? I do believe as we build these bridges and take a structural approach, we always have to look for opportunities, what I call the moments of truth. And COVID and what we're going through is a moment of truth. So I just want to give a quick shout out to Switzerland for donating and entering a swap with COVAX and allowing vaccines to go to the nations that still today don't have it, because I think it's obscene that this is not taken a faster pace. You spoke about speed. That's really, really needed. So thank you for doing that. As an organization, we also supported COVAX, and we provided non-payment guarantee to 21 countries that otherwise would have not been qualified. So I think we can talk a lot about what we need for the next 10 years, but there are certain things that we just have to do right now, and I just wanted to get it out. I think it's really important.
Thank you. And since you raised your hand, you offered to answer the question about the perception risk in developing countries that investors have. So
yeah.
Please.
So I think what I'll take more as a longer-term perspective is I truly believe the investor community, and I represent institutional investors. I work for insurance. We have 110 billion invested. We are absolutely convinced, and I think it's going to become very evident, that the switch to SDGs and sustainable investing is here to stay. So as you said in the video, it's not something that we're going to be doing on the side. It's going to be part and parcel of how we do business. But as Aggie said, we really have to find a way of scaling up quickly. Now, my asset management colleagues, I'm gonna preach a lot today on this panel, do share the fault, I'm gonna say, of many investors that Aggie pointed out, because they also prefer to, they look for those corners that are safer because whatever we put money into, eventually we have to pay claims out of, and so we have obligations. But as a global international organization, I can tell you, we already are present in 64 countries, and we do business in all of those countries, and a lot of the cases that I'll bring up today are actually very much in the global south. So it is possible, but I need to myself continue to build bridges within my own organization to say, why don't we take more of this capital elsewhere? And so it's a very real gap in perception, even within an organization that has 64 countries on the map and does a lot of business all over the world.
Great.
Sorry, so do you want me to?
Thank you. We'll come back to you. So another gap is finding ways to funnel the big money that's available, the big institutional capital, to these small impact ventures on the ground. And unfortunately, we don't get to see them here today, but look forward to seeing them virtually soon. So Eric, you're actually working with these entrepreneurs on the ground, and you're working with entrepreneurs that are pursuing purpose. What are some of the challenges and opportunities that you're seeing on the ground? And how can more of this big money that's available be channeled to these great entrepreneurs?
Thank you for the questions, and I have to say that I'm very happy to be on that panel because I hear perceptions, risk, I read misalignment, which somehow summarized some of the problem that there is on the. I will be more focused on the African continent because this is where Green Tech Capital we are more active. But I think that it's probably the same as well in other emerging countries. I think that the issue is, if we could simplify, it's a question in terms of capital and product. When you look at the product and you think, when I talk about product, I talk about African entrepreneurs, which have great ideas without the potential to influence the market because they live in an environment where most of the value chains are a lot of frictions, and then they can make immediate impact. They can create jobs, they can facilitate the access to knowledge, to essential, as we call them into Green Tech. I think that they have specific needs, and most of the needs are concentrated into from my perceptions, into smaller companies. Because those small companies that represent somehow 40% of the need in terms of capital in the continent, they are not really served because they need capital and they need capacity. They're also in an environment that is a fast-growing environment because any technology, if you look at, for example, at the fintechs have developed the last years and have created a lot of opportunity to create financial inclusion in those environments. In front of them, they have capital, which is much more in an environment that's much more structured, needs to have a lot of data, a lot of information, and in the same times is not built to actually provide the size of capital that is needed in those kind of companies. So this misalignment makes that the capital, even if, and I'm pretty convinced because I talk with a lot of organizations and a lot of institutional, wanted to bring that capital into those companies. They basically have a structural problem in order to do that. And one of the most important is that the existing business model of those institutions was designed to focus on how to generate profit from a financial perspective, and they don't have specifically the resources to address the capacity building need that is coming with the company in that space. So, but I think that I believe, because I try to be very positive on the side, that there is solutions. There is solutions to reduce the perceived gap, for example, and those solutions require actually adjustment on both sides. On the side of the companies, I think that there is a huge need in terms of information. There's a big gap in terms of information, and unfortunately, there is not enough, from my perspective, enough effort that is made to educate and help ventures in Africa or other emerging markets to structure the information so that actors, large actors, can have sufficient readability to able to be interact with them. In the same time, I think that there is a necessity for large organizations to engage with actors either to transform themselves by developing this competence of capacity building, integrated, or to find other partners who can do that. This is what we've done at Green Tech over the last 5 years. We start by mostly investing in the early stage, and then we realized that there was a strong need in terms of capacity building, and we started to think about how we could transform our investment competences and package it to bring capacity building. And obviously, it has required an adjustment in terms of our business model, and that's why we do investment. And at some point, we started to help international organizations to design programs and implement programs, leveraging on that knowledge in African companies. And this is one suggestion, but I think that larger organizations can have their own. But I think that it's an interesting way to look at.
It's so important, as you said. It's not just about money, it's also about capacity building. And actually, in addition to my role at OECD, I'm an associate fellow at Oxford, and we do an annual entrepreneurship policy roundtable. And this year, it was very exciting. It was on high growth entrepreneurship in Africa. And as you said, I mean, it's such a dynamic environment right now, especially in fintech. There's so many great entrepreneurs, there's so many exciting things happening. But also, as you said, one of the issues is that these entrepreneurs have trouble accessing not only money, but also the capacity building. In our, in our preparatory call, we were also talking about some of the intermediaries that can play a role connecting supply and demand. So I wanted you to talk about that a little bit as well. Like accelerators, incubators, and how do they also help connect supply and demand and provide the capacity building that you're talking about?
So it's actually a very good point. If we look at the African ecosystems, there is a large network of what I call enablers, accelerator, incubator, hubs, who facilitate the development of this ecosystem. The challenge is that those enablers have somehow we don't use all their potentials to help develop the continent. Today, all the knowledge that is expected and needed by international organizations is actually in those different hubs. But if you look, there's no systems that allows to leverage on an existing network was already structured, who has all the information in order to bring back the information to organizations that will need it to engage with the ecosystems. And that's why I think that it's worth to look more into all those enablers and try to see if today, with the technology that we have, with the capacity of digital transformation that we have, we can turn that existing network into reference. I think that you were mentioning that you somehow are witnessing when you support companies on the ground. You're also taking the hand of investor and showing them that we support this company, that this company can be relevant. And there's actually many organizations who can actually accompany you in that process. And that's why I think that they are very important, and they are very interesting leverage that haven't been used yet, I believe.
Absolutely. And one of the things we found in some of the earlier research we did at OECD was that while policymakers are supporting policies on the supply and demand side, there's very little to support these intermediaries. So they're trying to do a good job. They play a super important role, but they don't have an economic funding model themselves, and they don't have enough support to do what they need to do. Another thing that we saw, and this was evident when we did a workshop in Nairobi a few years ago, even though there's growth of activity, there's a disconnect between the international community that's coming in with funds and the local ecosystem. And in fact, what was really surprising, especially in Nairobi, which is a very dynamic ecosystem, the players there didn't see themselves as being part of an ecosystem. So they weren't really working together. Getting back to what you were saying, Aggie, in the beginning, I mean, there needs to be collaboration and cooperation between different stakeholders on the ground. So there's a huge amount of opportunity. There's so much growth in Africa and in other emerging markets, and so much opportunity, but also to get people to work together. That's why I think the work that you're doing at UNDP is so important. You're on the ground and working with these stakeholders. Yes.
Just one comment, because I think you pointed at a very important issue, and this is why I think we have a different role to play as well. We're talking about the ecosystem. We're talking about the players, but actually it's an eco network. It's not a system in many places, because system means that the parts of the system work together towards not just a common goal and not just in a coordinated way, but in a harmonized, synergetic way when one part of the system knows how to move the other one. So, I hear us and myself talk about the ecosystem, but I think the role at the level of the emerging markets and the national economies is to foster that actually it becomes a system. That the governments are not just an enabling environment, but they play their systemic role in the system and everybody else does. And this is one of the things that as UNDP, but others on the ground are trying to do, is facilitate a platform in which this system can actually start working as a system. And to me, that's number one, because the actors are there, the incubators are there, the accelerators are there, there's funding for capacity building, but you just need to make the wheels move together towards, for the car to go forward.
And the entrepreneurs are there, as we heard earlier. I mean, some of the most amazing entrepreneurs I've seen have been in emerging markets. Christina, I know, also wearing
perfect transition.
Also wearing your earlier hat as a co-founder and leading the work at GSEN. I mean, you're very familiar working with these ecosystems on the ground. So we're going to come to you next.
Thanks, Karen. So a perfect transition. Thanks, Aggie. So we have this global partnership with UNDP that we're very happy about, and that works extremely well, because at the GSG, our work is really to help ecosystems come together and form what is called national advisory boards that will really drive more capital towards the SDGs. That's our job. Our destination, what we want to see, is that every country has an impact economy, meaning that impact is embedded as a deliberate decision driver for investment, business, consumption, and policy decisions. And how we do that, we help ecosystems, all of the ecosystem come together. So when we look at an ecosystem, we look at 5 pillars. So the demand side, the entrepreneurs, the accelerators, the incubators, all of the people working with the entrepreneurs, the intermediaries, so those who connect the capital with the entrepreneurs, the supply side, and that can be anything from institutional investors, commercial banks, impact investors, foundations, all of the supply side. Very importantly, the governments. The governments are always at least in partnership or even sitting in the national advisory boards. And then all of the ecosystem builders or market builders. So academic institutions, business service providers, all of the networks and organizations that help also the civil society come together with these organizations. So everyone has to come together and be represented in a national advisory board. So at the moment, we represent 33 countries in the world. We work with another range of 30 countries, especially in emerging markets, to help them create these national advisory boards, which are the best possible representation actually of SDG 17, to really come together, have a national strategy, and drive the work forward to allocate more capital towards the SDGs. So I'm going to give maybe 2 concrete examples of something that's happening and that the national advisory boards are doing. So the national advisory boards, they usually do 4 things. They create awareness and education, so they will work with different stakeholder groups to educate them on how to invest into impact, how to measure and manage impact, and all of these topics that are really important. They will create market intelligence and work on, what are the gaps, the opportunities in a given market, create landscape analysis and all of that. They will very often and most of the time work with governments to change and improve policies on the ground, regulations and so on. And finally, some of them will also go on and catalyze new kinds of impact funds. So the 2 examples that I'm just going to give you is one, the UNDP SDG investor opportunity maps. So the national advisory boards that are in existence have been working very closely, hand in hand with UNDP, to allow those very great SDG investment opportunity maps to be socialized and with the investors on the ground, and also with international investors, so that investors can see which are the best possible opportunities where they can create high impact, but also, their returns that they're expecting. So, I don't know, for example, in Ghana, if you invest in the North Ghana in a grain storage facility, that's one of the most impactful things that you can do, and it's aligned with the SDG opportunities and objectives of the government. It's just an example. So I think that that's a very concrete tool that is existing. The second thing that I want to mention on this question of the mismatch between demand and supply, a lot of the national advisory boards are working on creating either wholesalers or fund of funds. For example, in Ghana, the National Advisory Board is working to create a fund of funds, an impact fund of funds, with the objective of having the pension funds anchor it. And the idea here is that by having a wholesale fund or a fund of fund, you have a trickle-down effect, because that incentivizes then either the creation of smaller intermediaries, venture capital intermediaries, impact venture capital intermediaries, for instance, that will then be able to invest those smaller ticket sizes into the impact entrepreneurs. Either the creation of new intermediaries or the incentivization of the existing intermediaries to allocate parts of that portfolio towards those smaller businesses. So that's one of the concrete solutions that is in existence and being developed. But then, of course, there's a number of hurdles, and we're working in partnership with a number of organizations, including the WEF, for example, and an organization called Collaborative for Frontier Finance, to support this work in Ghana, but also, for example, in Zambia. The National Advisory Board is working on something a little bit different, but has the same opportunity, SME finance. Especially in the COVID recovery, they're working with the central bank, and they are expecting the Development Bank of Zambia to host this finance facility for SMEs with the objective of primarily investing in the agricultural value chains. So those are very concrete examples that are available and out there to invest of how you can create the ecosystem and how you can create the right kind of structures to invest into the smaller businesses.
Great. Thanks so much, Christina. So collaboration at the international level, but also at the local level, and also connecting the two, very important. And the role that these national advisory boards play is so important. I mean, we've seen over the years, I've personally seen being involved in watching the growth of the GSG. And I just have to reference a great session that we had yesterday. Although Switzerland is the leader in sustainable finance, impact investing, blended finance, we don't yet have a national advisory board in the GSG. So I know that there's work underway to try to make that happen, but I think that would be an important development also in the market. You mentioned wholesalers and the important role that wholesalers can play in taking big institutional capital, funneling it through financial intermediaries that can actually then reach the small entrepreneurs on the ground. So I think that's a great transition back to you, Veronica. So in your opinion, what are the three or few primary barriers that are holding back mainstream capital from SDG investing?
So now I'm going to speak a little bit more positively about my organization, because I think I owe them. So as I said, I think the fact that SDGs for me are here to stay is manifesting itself in a pretty meaningful mobilization of capital. But Christina is right. There is a gap between the ticket sizes that are available and what institutional investors need to mobilize. So to give you the example of my organization, we already today have 2.6 billion in green and sustainable and social bonds. We want to take it to 4 billion by 2024. We already today have 23% in renewable energy, 23% in social infrastructure. So that's hospitals, schools, that kind of stuff. Which, by the way, the more traditional asset managers don't love. They don't think it's actually an investable asset class because it's social good. We tend to disagree, but that's a perception gap. That's what I was hinting to before. And in fact, we want to take that and grow it to by an additional 750 million in the next 2 years. It's a lot of money, and it's still not a lot relative to the size of the balance sheet. It's a 110 billion balance sheet. So we will, in the next 2 years, have about 4 to 5% of our balance sheet, maybe a little bit more, in direct SDG selected projects, but we should take it to 10%. And we represent industry that has 30 trillions. So this ability to find enough pipeline of investable projects is a crucial issue. The second thing I want to mention, Karen, and again, to the system approach, it isn't about principles. So I think many people start with, do we subscribe to the principle? Absolutely we do. Back in 2007, we contributed the principle sustainable investments. It was just maybe 10 years ago we did the principles for insurance, sustainable insurance, so from the underwriting side. Then you go to commitments. So we made our commitments, and we moved the entire portfolio to ESG benchmarking. Now, we need this tracking and execution and ability to be more directive. And that's why we developed an SDG calculator. It includes 45 different dimensions. We're working with UNDP in building it up. And let me tell you, it's very difficult. We're excited. We already have early signs of positive investments. For instance, between sustainable energy and non-sustainable, non-renewable energy or coal. You can immediately see it. By making the switch back in 2017 to have all of our public assets that are ESG benchmarked, we've actually outperformed the market substantially. So we know this is good business. It's not just good business, but it's really good business financially. Sustainable business is good business, but we need more pipeline. And that's why the SDG calculators for us is fundamental, because by feeding quality data, consistent data across these 42 dimensions, we have an ability to completely shift our entire organization. And as a, if you will, I'm going to be a bit arrogant, but like the central banks of the banks, right? Because we provide capacity to the entire insurance market globally, we have as a wholesaler of insurance, the ability to help move the entire insurance market. That is the 30 trillion game. So it is really, really important that we get this collaboration across in getting quality data and improving the quality of the projects. Can I mention one quick final thing super briefly, Karen, because I've spoken about the investments, but it goes beyond that. With the UNDP, I just want to give a shout out to the colleagues that invited me today here. I lead a unit that is responsible for public-private partnerships and building capacity for insurance solutions, for resilience building in the markets. And we've been at this for over 10 years, I would say with good success. But we really don't see enough projects because governments really struggle with what Aggie mentioned, the technical capabilities of getting things off the ground and then getting the financing to start with. So it was back in 2019 in New York, when we can still travel, that we had finally the tripartite agreement between the UNDP, the UK and the German government to launch a facility that would reach 500 million people and mobilize 5 billion of capital to protect the 20 most vulnerable countries in the world, with building real capacity and real protections for millions of people. Today we've worked, it's taken a bit of time to get the countries' alignment, but this is how it really makes a huge difference. The UNDP has helped open doors that we couldn't open ourselves, even through the Insurance Development Forum, which is, again, it's a platform for collaboration across the industry. We couldn't get to the right seniority to get to their attention the importance of building this capacity and making this commitment. So thank you so much for helping us there. On our side, we're now working with 13 countries, Swiss Re is involved with 7, and we are making a difference, whether it is farmers that are on the line of subsistence or building strategic critical infrastructure for social infrastructure or natural catastrophe protection, changing really concretely the livelihood of so many people, but it really needed this kind of support. what the UK and the German government did exceedingly well, they also understood that to cover for this protection, funding was needed, and they helped with the premium financing. But it works because this only works if we move off grants and allow these countries to then create funding and solutions that stay for decades to come. And that's part of the mechanisms that we hope to see unlocking very effectively for the future.
Great, thank you. So lots of progress, lots more still to be done. You mentioned governments, and I wanted to come to the role of regulation. You also mentioned data, so I'm going to combine these together. Obviously there's been a lot of talk during Building Bridges about measurement and data, and we heard at COP26 the announcement of the IFRS Foundation and the creation of the International Sustainability Standards Board. We've also heard this week and in the summit on Monday about the EU and all the progress on the taxonomy and all the related work on regulation within the EU. So obviously there's a lot of movement here. Christina, I know the GSG is co-chairing the G7 Impact Task Force. Could you talk a little bit more about progress on that front?
Yes, and actually I'm going to give you a little bit of exclusivity here because we are launching the results of the G7 Impact Task Force on the 13th of December. But because I'm here, I'm able to share with you a little bit about what that's going to say. I'm still inviting you to join that meeting. It's you can either travel to the UK, although that's maybe a bit challenging right now, or you can join online the launch of the Impact Task Force. So earlier this year, we were mandated by the UK to run this Impact Task Force. And so the idea here is that we put together a really pretty amazing group of people who have been working on a number of these issues to make recommendations to the G7. So we have got a group of 120 leaders working on this from all parts of the industry, all parts of the world, on two work streams. Work stream number one is has been chaired by the CEO of Standard & Poor's and was looking at impact, transparency, and harmonization. So the recommendations here are really around three topics. One, transparency. So we're advocating for a mandatory impact transparency regulation by 2025. Of course, there's a lot of work that has been done, a lot of progress has happened, a lot of organizations are now publishing and disclosing what they're doing on sustainability. If we're looking at the top 500 businesses in the world, it's progressed from 17% 10 years ago to about 75% of businesses disclosing right now. But still, it's absolutely not enough. And what is voluntary is great, but it's not going to change the world. So we really need that to happen. And so we need to make progress on transparency and really account and report on what are the impacts on sustainability, positive and negative. So it's really important that we progress in that direction. The second is harmonization of standards. And there is really, thanks for mentioning the work of the IFRS Foundation. It's an absolutely fantastic step, but it's one step to getting closer to harmonization of standards. Much more needs to be done. And finally, integrity. So we talked about data, and data for sure, and the infrastructure of data, the interoperability of data is extremely important. But also something that we haven't mentioned here is the voices of the communities. We need to bring the voices of the communities into these processes, into how data and also all of the work is affecting them. So that's a really important dimension. And on this, also two other considerations. One, it needs to work for all the businesses, including the smaller ones. So SMEs have to be also at the table to discuss how this is impacting them, how this is workable for them, what are the capacity that they need to make it work. And also emerging markets. A lot of the work, great. The IFRS Foundation has been operating to create the international standards for accounting, wonderful, but it's mainly governed by very wealthy countries. And so we need the emerging markets also to come on board and be listened to in these conversations. The second work stream has been on how we boost capital allocations towards emerging markets, especially towards emerging markets. And here I'm going to focus on our calls to action for government and government players. So one, we're asking governments to modify the mandate of the multilateral banks and the DFIs. Why? Because they are one of the most important groups of players that can help scale change all of this. So I'm just going to be a bit challenging here. The financial innovations and the innovations, more or less, they exist. So let's not try to say we need more innovation, no. The tools and the financial instruments are there. Yes, maybe they can be tweaked, they can be improved, they can be made more relevant for the different players that need to be around the table, sure, but they are there. So we need to scale up what is there. Blended finance, for instance, and all of the instruments that are already in existence. Lots of great work is there, but the pace is too slow, the volume is too low. So how do we dial that up? And the second is guarantees and insurance. Lots of different insurance products are available. Guarantees also are a really great tool to ensure that more capital is allocated towards the most riskiest parts of the markets. And for instance, there is no, and that's also a call to action from for the donor community. I mean, it's a true belief. There is lots of pipeline, lots of really great actors working on the ground that are totally ignored because donors, multilateral organizations, and investors also prefer investing in what they know, in people who look like them. At the moment, there are studies that say that investees in Africa, 98% are white male, and most of them have been trained in the US. Great, wonderful. I mean, but you know, there is lots of capital that has to go to the actual local communities that are doing absolutely wonderful work and are totally being ignored. And that includes also consultants, donor organizations, multilaterals. We all work with people we know. We need to look at a little bit harder at the people who are doing extraordinary work in the countries. And they do exist. It's just a little bit more effort. And so the final call to action also around the governments is to ask ensure that the capital mobilization, the private capital mobilization, has equal weighting as the balance sheet investments for the multilateral banks and the DFIs. That will really allow them to scale change, how they are working, and the partnerships that they are having.
Great. Thanks, Christina, for this sneak peek at the upcoming reports. The two reports, well, actually there are three. I think there's one from the task force and then the two working group reports. I'm involved in working group A, the one on transparency and reporting integrity. They'll be released on December 10, and then the event, as you said, is on December 13. And also what you said about we already have a lot of instruments gets back to what Aggie said in the beginning, that it's about working differently. The innovation is not in the tool, it's in how we work together and working collaboratively. I wanted to come back particularly to impact measurement management. We also last week launched the impact management platform, which the GSG is also involved in, which goes to your second point about harmonization. A lot of investors and companies say, well, it's too difficult to measure, so I'm not going to measure. Everyone has a different approach. There's no one framework. Well, there actually is no one framework. There never will be. There are different tools and approaches that companies, investors need to use at different stages in the process of impact management, whether that's at the disclosure stage, whether that's at the objective setting stage. And the good news is there are a lot of tools that exist. So what we've done between 17 standard-setting organizations, 6 international organizations, including UNEP-FI, with whom you're working closely, UNDP, OECD, IFC, and UN Global Compact and UNDESA, who just joined us, as well as all the acronym soup that you know, GRI, SASB, and all the others, World Benchmarking Alliance, that are involved in this. We're working together. Our first product is this web tool that came out 2 weeks ago now, the Impact Management Platform, open source, free tool. Please take a look. But I wanted to come back particularly in terms of regulation. You were talking about mandating some of this reporting, and you were also talking about emerging markets and SMEs. I wanted to come back to you, Eric. How does this all sound to you, all this mandated regulatory reporting for the poor entrepreneurs on the ground in Africa and other emerging markets?
I don't know, you want a political answer or? I think that we have to see from the perspective of the entrepreneur, because what we're saying is that we have tools, we want to provide those tools to those people so that they provide you information. And first of all, I think that there need to be an association between the tools and their everyday needs, because the market is different and they have daily challenges. This morning I was talking with one of the founders that we invest in, and we were talking about different solutions in terms of how to incentivize them, and we were talking about carbon credit. And the first thing where we agree is that for people to be able to provide those data, those information that is expected, they need to understand how it's going to impact their life at the moment where you ask them. And this requires to clarify what is the added value for them. And secondly, that's also required to give them this education in terms of the information. There is, when you look at the ecosystem, most of the entrepreneurs that we're working with, one of the biggest challenges, and it comes back to the pipeline, and it comes back to sourcing, it comes back to restructuring the information. Most of them, they don't even have their information. And it's not that they never had those information. They had those information, but they did not store them, did not find a way to structure them, because they could not foresee how they will use those information. And this has an impact on the entrepreneur. And this has also an impact, direct, because I think information is one of the key problems that there is between the two hemispheres, the North and the South. It also comes directly to when we look at the disparity that there is between countries. We were talking about the fact that most of the capital that is available is dispersed in the north. But if you look at Africa, you have basically 5 countries out of 20 or 54 that collect most of the capital and most of the focus of the investors. Why? Because all the activity that is done by the other network in the other countries doesn't appear. There is no way for those organizations first to bring the information up. And because there is no way for them to do that, there is no way for them to have, how can I say, to reach maybe the level and the standard of information that is required by the different stakeholders to engage with them. And that creates, and it's not it's very, I think it's create a vicious circle. One of the things that we've been working now for 1.5 years is try to understand how to break that circle and where we should provide education in terms of those are your informations, how you should structure those information so that the moment you'll have the opportunity to engage with the stakeholders, you can seize those opportunities. And this effort has to be done, I think, at the level of the companies, but it has to be also done at the level of the different stakeholders that are on the ground. Because even if for us it looks very obvious that we have information, we structure them. I'm like, every investor will expect a company to have a data room. But even today, I have companies who are sending me a message and asking me what document they have to do to put in which part of the data room. So I think that we need to provide today, we have technology, we have solutions, we need to provide them the frame to be able to do that. And that will allow also to facilitate the communication. And when we will have the opportunity to put in place regulations, structure, then they will have the capacity to connect with what's going to be built. As long as this will not be done, then we will have nice system, but the audience who's actually providing this impact, the one that people want to measure to connect to any SDGs, will not have the possibility to interact with it.
Very, very important message. And it's also important not just for the stakeholders, the local stakeholders, but also for the international sort of value chain of investors, because otherwise there's so much pressure put on these entrepreneurs and they don't have the capacity and the knowledge. And the problem is a lot of people want a lot of data, but what we need is data that's relevant for decision making and for at each stage in the value chain to understand what's relevant for decision making. Otherwise, 100 pages of data doesn't do anyone any good. So
I think if you look at what happened with the COVID, a lot of investment organizations have removed their local teams from the continent, which is actually surprising because there's a will to get more investment in the ecosystem, but now you remove the relay to get to that investment. But I still believe that the network of actors in the ecosystem, and I really like what you said in terms of turning this network into a system. So I wrote it down, so sorry, take it from you. and I really think that this network, I'm like, and this is something that we're working on, is if you could digitalize the information from all the stakeholders in the ecosystems, you will have the possibility to scale the information up to the bigger structure. You will have the possibility to transfer the knowledge to the local. And I think that this is really a way that needs to be investigated to address that.
fantastic. On that note, I know, Veronica, you want to come in, but I've promised to open up to Q&A. And I'm just looking at Sarah and Louisa because we started a bit late. So do we still have time for Q&A? Okay. So why don't we open up? There's a hand here. There's a hand back there. I'm going to take a bunch of questions together, and then I'll turn to the panel. And Veronica, you'll get to go first. So once we hear the questions, please keep your questions short and briefly introduce yourself. We want to get as many questions in as possible. He was the first one. There's another hand in the back there.
Okay. Sorry if this is not going to be so short, but it's got numbers
Please.
attached. Okay. What can be done
We'll have to take your mic away.
structurally and institutionally to bring impact-focused investment up to the level of success that we've seen in the global venture capital industry? Because right now, you've got 288 billion, which is something like double the previous half year's capital raised for venture. In the first half of 2021, right in the middle of COVID risk, focused on risks that are 70% likely to fail, and yet there's more money being thrown at this than ever before. So what's the structural component, the organizational component that needs to be put in place to enable impact-focused investment to achieve something like that scale?
Great, thank you. And then we'll go to the woman with the sort of reddish scarf in the back there. And I welcome your question. I used to work in venture capital, and then I've been working in the impact investment space. So I think it's a very important question. And just a reminder, it did take, back here, can you raise your hand again? Thank you. It did take decades. It took about 6 decades for the venture capital market to take off. So there was a lot of, hopefully the impact investing market can go much faster, building upon the work in the venture capital market. Go ahead.
Hi, hello. I'm Ljubka Mitvinovska, representing the Impact Hub network and Accelerate 2030, which was actually an initiative that we launched together with the UNDP in the first Social Good Summit before it became the SDG Finance Summit. So first, good news. There are some entrepreneurs that made it to Geneva. They're sitting here, and they will be outside to meet you. So you can still connect with some entrepreneurs and hear firsthand about some of these insights that you raised that resonate with the work that we do. So maybe just a little bit of context before I ask my question. So we've been working for the past 5 years, building this pipeline of SDG-related entrepreneurs from developing and emerging markets, together with partners like the UNDP and many others. And as you can imagine, this and what you raised as an issue is the quality of the pipeline and the data of the pipeline. So those that work in the sector might empathize that there is quite some work going in pipeline building and raising the quality of a pipeline. And we have done quite some learning in also how do you connect the impact to the SDGs. We've developed courses, we've been doing a lot of individual work. So there's a lot of heavy lifting happening in the process of building a pipeline and building it to the next level. So how are we thinking in terms of the investment that also, so from all these trillions and millions that we're talking about actually this piece of the process where we're actually generating and raising those pipelines to the needed quality. What part of the investment might go to that process as well?
Great, thank you. And I think I'd seen one other hand over here, but I'm looking again to Sarah and Louisa to see about timing. Okay, great. So we'll take that one more question if that hand is still up. Otherwise, I'll turn back to the panel here. And then we'll go to the panel to have quick answers. And then I would love to have closing comments from the panel, just your recommendation for how we can move forward in getting more SDG finance, not only to developed countries, but also to developing countries.
Okay. Hi, good morning. My name is Sarah Jerry. I work at Responsibility, an impact investor based in Switzerland, and we invest exclusively in emerging markets. I think my question is more for Veronica. I was interested to hear her thoughts regarding the private capital mobilization through natural catastrophe bonds and the role that Swiss Re and others, of course, could play in ensuring that indeed natural catastrophes that unfortunately might grow in intensity and in numbers might be covered through that type of structures. Thank you.
Great, thanks. So Veronica, you're first to answer that question and touch upon any of the others that you'd like to.
I'll be super brief. So absolutely, we do support very extensively risk transfer through natural catastrophe bonds, exactly as you pointed out. I'd say I think the World Bank is, for instance, been a very effective intermediator through the risk notes because they actually do two things. They build the capacity. They help create fundamentally very affordable terms, the structuring, but they also then use commercial markets for the placement, and they're very, very good at extracting very cost-effective terms. And I think out of 18 placements they've made, we worked with them on 17. So for us, for my team, for the company, it is an absolute mandate. It's how we demonstrate. To the gentleman that asked the question about how do we move, I'm not a venture capitalist, so maybe someone else is better equipped, but I will give more a principle answer if you allow me, which is, I don't know if this gives you comfort, but everyone in my organization for the last 2 years is measured by our sustainability impact. So the entire leadership, myself included, our bonuses, our careers are based and linked directly to that. I think the moment that we use the existing systems where we just aligned incentives, which is why I had raised my hands when Eric spoke, I think is creating an alignment of incentives. Markets can be very, very efficient if you create the right incentives. So as a company, we made that an incentive, and it's part of board compensation and our compensation. Can I take another 30 seconds or not? On the point of incentives, and I want to build on what Eric said, him and I had the benefit of a quick catch-up before. 2 quick observations. Eric has a very valid point. We work with and it's one of the institutions, but we're in Switzerland, so I'll quote it. We work with the Swiss Capacity Building Facility. It's been 10 years now that it's been established, supported by both public and private coordination, and it is about creating, connecting the dots. And what we discussed a week ago is what we call the pioneering gap, which I call it the cemetery, fundamentally. It's that phase after, you're done with grant money, but you're not already ready for a TPGA to put money into your organization. That is real the death of a lot of social entrepreneurs. And it's a bit like COVID. I have emotions around this. I really think we have to find better supporting mechanisms. So for me, that would be a point of interventions. as an organization, how we're trying to help. Well, we created, again, we changed our sustainability framework for the business people. I'm not part of the foundation. I run a business, and I have to convince my colleagues that this is good investment. So what we did, we asked them, what is it that prevents you from writing this business? And it's back again. Data, we can assess the claim, we can build the models. So you guys, you know what we did? Very simply, we said, tell us what would good business look like 5 years from now. If we can get to that target, 80% loss ratio, I'm going to go into technicalities. You know, you want to reach a minimum of, 500 million people. Fine, give me those targets. But you can't ask for that right here, right now. These entrepreneurs need 3 to 5 years to build up. And with that framework, we managed to pass 5 fantastic transactions this year that a year ago we wouldn't have been able to do. And this is good business. But we just have to align the incentives, and then the magic works.
Great, thank you. I think this message that investing for impact and sustainability is good business is such an important one, and we've seen evidence of that over the years, and we'll see more in the years to come. And also the point that once we're really mainstream sustainability measurement, then we won't have to call impact investors. They will be the venture capitalists that are investing for impact. So I'm hoping that we're going to get to that point sooner rather than later. Are there panelists that would like to address some of the other questions? And I'm looking at Sarah to give me the sign that we need to finish. Okay, I think we're reaching that point. So Christina, if you want to come in quickly.
Super brief comments on the question of scale. So one, and related also to your question about bonds, what is really interesting is that today is an opportunity, and I join you, Veronica, on this. We are at a historical moment. There is so much more interest and conversation about sustainability. There is 30 trillion that are already allocated to ESG, 80 trillion that are committed to ESG. So it's about 1/3 of all capital markets that are already committed to sustainability. And so, yes, if we look at impact investment with a kind of a narrow definition, it's only 1 trillion. But the opportunity is huge. If you use the capital that is allocated, and you add a little bit to it, which is measuring how it's actually doing, reporting on it, and being more strategic about how you allocate that capital, then it's transformational. So I think that that's one point I want to make. For example, there's so many bonds, and there is many, like the SDG standard bond standard that has been developed by UNDP is a great example. The UK has developed a green plus bond mechanism, a sovereign bond mechanism, where the social co-benefits are being measured. This bond has been 10 times oversubscribed with 100 billion investments. So I stop here. Very positive. I just want to mention 2 things very quickly. One, on the structural, there are a lot of structural problems in the capital markets overall. If you are interested in this topic, have a look at the pre-distribution initiatives work. It's very exceptional, and it reports really on how the overall system is flawed, and there is too many people taking too many risks.
Great. Thank you so much. As you see, we could go on all day, but we don't have all day, and I think we have lunch coming. But I wanted to end on the words of transformation, mainstreaming, integrity. And thank you so much to the panel. It's been a great discussion, and hope we can continue the discussions throughout the day. Thanks.
Thank you so much, Karen, and thank you so much, panelists, for this lively conversation. We've got a very quick lunch break, actually only half an hour, and I invite you all to join us at 1:30 to learn more about challenges and opportunities to invest in Colombia. And we will start with a high-level keynote from the Minister of Planning from the government of Colombia. And For sure, it's going to be quite interesting to deep dive directly into our insight to understand the investment landscape in Colombia. So 1:30 here, please. Thank you. Welcome again. Thank you. Thank you for joining this afternoon session. We're going to deep dive on the case of Colombia and discover more about the challenges and opportunities to invest in that specific countries. We're gonna give like 1 more minute to our on-site audience to join the room. And then I'll give the floor to Agui Veres, who is UNDP Geneva Director, to set the scene, give you a snapshot of the work we've been doing in Colombia to map the investment opportunities aligned on the SDG. Then we're honored to have with us Alejandra Botero, who is the Director, National Planning Department of the Government of Colombia, who will give us some high-level keynotes. And we will also end those introductory remarks with Alejandro Pacheco, who is the Deputy Resident Representative from UNDP in Colombia. Then we will have a high-level panel focusing specifically on investment opportunities for sustainable development in Colombia. But let me give the floor to Agui Veres, the Director of UNDP Geneva.
Thank you very much. I guess we lost our audience a little bit, but hopefully they are still going to come in and join us. So this afternoon, we wanted to take the conversation forward and zoom into a country where we actually are applying all of these principles, tools, approaches, partnerships, and so forth in Colombia. So we really want to have that in-depth discussions with the partners on the ground and here in the room. So I think we just have a few introductory slides that will demonstrate a bit more what we're doing. So essentially, in Colombia, what we did is trying to take all of these ideas of how we are gearing investors towards investments, and the investor maps and the investor platform that we mentioned before, we developed specifically for Colombia and also some other countries. So you can just see where we are already doing the investor maps and where we are working on it. And essentially, we can go to the next one. And essentially, this is now maybe easier to digest what we mean by the investor maps. So the investor maps are essentially looking at sectors, priority sectors, that are the priority part of it comes from the prioritization of the national context. What are the key sectors where investments are needed to gear towards the SDGs and the impact that they are looking for at the national level? And then this distills down to basically 22 investment opportunity areas. So you can see in the case of Colombia, in the sectors of food and beverage, tech and communication, renewable energy, healthcare, etc., you can see it there, that it's really broken down to a much more detailed level. And then for each of these layers, when we talk about, for example, biofuels and bio-based chemicals, then there are data points that we analyze. So essentially, we offer that market intelligence as an open global public goods to say if you were to invest in the biofuels industry, this is the return, this is the return, this is the time frame, these are the risks, and these are kind of the economic indicators behind it. So the colleagues involved in the project, maybe we can change the slide, are going to explain this more in detail, and I'm not going to go into the technical details, but you can kind of see the type of information that we make available. So what we want to do this afternoon is talk to the panel and kind of answer two questions. How is this helpful and how can this be used? What do you think as an investor when you see that, and how is this helpful when you're an entrepreneur? And then what can we do in terms of partnerships to bring the two together? So with that, I think I'll hand over so that we can actually focus on the substantive discussion, and it would be really great to bring you as well in and have a conversation rather than just listening to a panel discussion as we move ahead. But before that, we have a couple of interesting speakers who will share the experience with you. Thank you.
Thank you very much, Aggie. We've got now a high-level keynote from Alejandra Botero, who is the Director, National Planning Department from the Government of Colombia. Alejandra, the floor is yours.
Thank you very much. Can you hear me properly? Hello?
I hear you very well.
Yes, we can hear you. Thank you so much.
Thank you, thank you. Well, thank you very much for this invitation. I would like to begin by thanking the UNDP and Director Aggie Veres for hosting the 5th version of the SDG Finance Geneva Summit to promote investment aligned with the SDGs and the 2030 Agenda. Thank you so much for giving Colombia the opportunity to share our experience in the private-public collaboration and to connect with European investors who will have a chance to learn about the innovative and strategic ways Colombia is working to meet the 2030 Agenda goals. Faced with the current pandemic, the 2030 Agenda presents an opportunity to mature alternative development models that address these problems together. The response to the pandemic cannot be disassociated from the 2030 Agenda, which is consolidated today as the world's foremost tool to address health risks, environmental crisis, poverty, and inequality. If recovery plans focus on business as usual practices, we believe an opportunity to promote alternative development models is going to be lost. Therefore, I would like to begin by addressing SDG number 17, Partnerships to Achieve the Goals, that urges all stakeholders to encourage and promote the establishment of effective alliances in the public, public-private, and civil society spheres, among others, guaranteeing that the implementation of the 2030 Agenda is a continuous and participatory process. Supporting the implementation of the SDGs is the way to guarantee an effective recovery with environmental sustainability. Today, more than ever, the 2030 Agenda is consolidated as the first line of defense against the impacts of COVID-19. Building back better is thus the route to rethink long-term growth objectives and to promote innovative, green, and sustainable solutions. The 2030 Agenda and the Paris Agreement, both adopted the same year, are reaffirmed today as our collective roadmap that can generate the conditions to eliminate poverty, reduce inequality, promote well-being and prosperity to all people and face this environmental crisis. It's essential to close the gap between project developers and the access to financial resources. This must be done in coordinated activities between international organizations, the government and private companies, through strategies that contribute reactivating the economy and promoting adequate financing, both for adaptation and for mitigation projects. The Colombian government's roadmap for the 2030 Agenda implementation has provided spaces and mechanisms that facilitate the interaction and articulation of different stakeholders for the fulfillment of the SDG national targets. One of our key examples is the Climate Action Finance Facility. From the National Planning Department, we are designing the Climate Action Finance Facility, which is a broker-type system that mobilizes climate resources as it is established in the National Strategy for Climate Finances and the measures contained in Colombia's nationally determined contribution objectives. The goal of the facility is to connect financing need from the sectors to sources of financing, private and international supply. The system pursues the following objectives. Firstly, it defines sectoral clusters to improve interinstitutional coordination and defines priorities in order to obtain international support and financing allocation. Secondly, it promotes the formulation of initiatives that support the compliance to the NDCs. Thirdly, it mobilizes the climate change agenda and makes it more accessible to everyone who is interested in having a role in the implementation of Colombia's commitments through a broker system that connects the country's demand needs with different sources of finance. And finally, we are articulating the Climate Finance Accelerate, a program supported by UK Pact. In this way, the facility is expected to support the structure of potential projects and connect them to financial stakeholders. Our second example is the blended finance efforts that are being done by the national development banks. In Colombia, we have a green finance subcommittee made up by the 4 national development banks. Our goal is to have 4 green national development banks that all designing potential instruments and mechanisms of blended finance to mobilize resources for the SDGs and the climate agenda. Colombia is seeking to increase the strategic use of development funds through blended finance to achieve additional mobilization of traditional resources and increase the financing available for sustainable development projects by incentivizing greater private sector participation in the financing and implementation of the SDGs. One of the key examples is FDN, who is exploring and collecting expressions of interest on potential funding opportunities for the upcoming blended finance program to access financing resources in the international market. The program is envisioned as a vehicle to implement the country's NDCs, bringing to life infrastructure projects in renewable energy and electric mobility. The total requested amount by FDN is a minimum of US 10 million, up to 100 million, which may be distributed in different projects, sectors, and products. Another example is Bancoldex, which is preparing a support request to structure a blended finance program for trade, industry, and tourism sector. This program will have a roadmap complemented by the investment plan to obtain concessional resources supporting the provision of financial opportunities for sustainable projects with efficient financial conditions. The projects will be focused in energy management, sustainable production processes, business logistics, operations, and product handling related to the manufacturing industry subsectors. Another interesting experience is the one of our export promotion agency, Bancolombia. ProColombia is the entity that promotes international tourism, foreign investment, and non-traditional exports. In October, at the Colombia Investment Summit, the most important foreign direct investment event in Colombia was held. It included a portfolio of 41 sustainable projects in 9 different chains, including agriculture, energy, tourism, infrastructure, manufacturing, chemicals, and life sciences, real estate, fashion, infrastructure and logistics, and information technology communications. All of these projects had a minimum investment request ticket of $3 million. As president of the High-Level Commission of the SDGs in Colombia, there are 2 main issues I would like to highlight. Firstly, is the joint project of the Integrated National Financing Framework, INFF, which will allow the establishment of a medium-term strategy aimed at financing national priorities towards sustainable development and the fulfillment of the commitments established against the 2030 agenda at the country level. Secondly, the approval of the framework to advance in the formation of a multi-stakeholder platform with the participation of the national and local governments, the private sector, the academic sector, civil society, and international cooperation, which we hope will begin to function during the first semester of 2022 and serve for the dialogue, monitoring, development of initiatives and projects around the SDGs based on public-private partnership. The work carried out by UNDP in collaboration with the World Alliance of Investors for Sustainable Development of the UN General Secretariat through the SDG investment platform, in which Colombia has the 20 opportunities that were described just earlier, is key to bring financing sources closer to profitable investment and opportunities aligned with the SDG. I would also like to highlight the SDG Corporate Tracker, a multi-stakeholder initiative that seeks to measure the progress of the private sector towards the SDGs. Throughout the 2030 agenda, the private sector takes a transformative role in solving the major development challenges, especially in a post-pandemic context. In fact, 53% of the national SDG goals require the active participation of the private sector for the effective implementation. For us, the SDG for Corporate Tracker, launched in 2020 together with UNDP and the GRI, is a very successful experience. This initiative, together with the national monitoring system, allows the country to know approximately the important contributions of the business sector to the 2030 agenda in Colombia. In the same spirit of SDG 17, the SDG Corporate Tracker is a multi-actor initiative involving the government, international cooperation, and the private sector. In this way, it contributes to the discussion of public policy and decision-making on the contribution of the private sector to the SDGs. On this online platform to date, we have 11 implementing partners and more than 600 registered companies, of which more than 317 are reporting. This year, Colombia presented the third voluntary national report, Accelerating SDGs Implementation for a Sustainable Recovery, which included a chapter with the SDGs corporate tracker information. The chapter evidences the government's effort to articulate business initiatives so that the private sector can strategically generate information to contribute to public policies, discussions, and decision-making for the implementation of the 2030 Agenda in Colombia. I would like to close with these final messages. In financing for a sustainable post-COVID-19 reactivation in the short term and long term, governments, civil society, and the private sector must participate. The innovative mobilization of resources from the public sectors through national and international official development aid to leverage investments from the private sector today are more relevant than ever. For example, under figures such as blended finance to mitigate risks or transaction costs. Given this framework and the opportunities provided by the Geneva Summit on the SDG finance, I extend an invitation to all interested organizations to engage in deeper conversations to explore possible opportunities to work together and develop collective work with a long-term vision to support the commitment to the Paris Agreement on our climate change agenda. Thank you very much for your time.
Thank you very much, Alejandra. Thank you so much. Now I've got the pleasure to, sorry, it doesn't work. Yes. Thank you so much. I've got now the pleasure to welcome Alejandro Pacheco, who is the Deputy Resident Representative of UNDP in Colombia, for very quick opening remarks.
An introductory remark on 3 points that I would like to share very quickly. The first point is, as you may have seen, there is strong leadership by the government of Colombia. There is strong commitment by the government of Colombia, and in this case, by the planning ministry, to the SDGs and to a multi-actor type of intervention. And we can see this not only in the initiatives that the government itself advances, but also in the way they do it. And they do it, and we do it together with the ecosystem, be it ESG, be it NAP, be it B Corps, be it companies that are fully committed to it. So that's what I would like to highlight from UNDP's perspective. It is really an honor to be part of such an effort. And this we can see, as Alejandra was mentioning, when we look at initiatives such as the Green Bond that was launched recently, the initiatives such as blended finance, that there are quite a few, some of them supported by UNDP ourselves. And mainly when we look at the national budget, we have been working with the planning ministry and with the finance ministry for the last 8 to 10 months. We have now read the entire budget. And when we look at the national budget of Colombia, 89% of the national budget is addressing SDGs. That is massive and catalytic towards blending financing and to also enable private investment towards SDGs. So now the 3 messages. One, there are very interesting opportunities to invest in Colombia to advance the SDGs. And that you can see, and this goes to the second message, that you can see when you look at the mapping that Aggie, our director in Geneva, briefly mentioned. So when you look at that mapping, you see 7 prioritized sectors, you see 22 hotspots, and these don't come from the mind of a consultant or something like that. They come again from 8 months of intensive work, consulting national priorities, consulting private investors, consulting experts, and identifying where these opportunities lie. So we see, we will not go into details now, but the information is available there. It's online. You can check it. You can see specific sectors. Within sectors, you can see specific opportunities, and within specific opportunities, you can see the ticket size and actually which opportunities you would be advancing. Just to give one example, you could be, there was Aggie mentioning that one, you could advance on renewable energies, off-grid renewable energies, while also pushing for economic opportunities in remote areas. So they are not kind of siloed opportunities, but they have the notion of the SDGs. You could look at traceable value chains where you use blockchain technology and you bring technology to the agro and financial inclusion, right? So I will not go into the different details, but the third and last message, and I will stop here, is I understand we have here very responsible investors, be it impact investors, be it asset managers. There is a huge opportunity to balance those portfolios. And precisely what we are doing is building these pipelines that enable these balanced portfolios to advance the SDGs. So again, thank you very much. Have a great day. You will see now in the panel very concrete opportunities. You have already heard from the Minister of Planning. So from UNDP, we have nothing else to say than it's a pleasure and an honor to accompany this space. Thank you very much.
Thank you so much, Alejandro. So we're going to wait for 2 minutes before diving into our panels. As Alejandro mentioned, the panel will deep dive into the investment opportunities in Colombia, and we'll provide some concrete example, but also very specific insight from impact investors who have already explored the opportunities in that countries. Eva, maybe we should open the door so that if we've got the audience who is still outside who want to join, I'm just going to ask you to be patient, and we're going to wait for 1 minute. Maybe, Agui, I can already invite you on stage, and I'm going to invite the panelists. So Agui Veres, UNDP Geneva Director, will be your moderator today. She will be on stage with Tim Raji, who is the CEO of Alpha Mundi Group, and Cédric Lombard, who is the Chairman, Impact Finance Management. We will have also 2 remote speakers, Franco Pisa, who is the head for the sustainability area of Banco Colombia, and we'll have also Cristina Vélez, who is business expert and consultant, and she has designated, she's the Dean of the EFIT Business School Dean, and thank you so much for putting the slide, so it's going to be much easier for all of you. Let's wait 30 seconds, if you allow me, and then I think we're going to start. Can we check if our 2 online guests are also connected, please? Yes. Thank you so much for joining us. So I think we're ready.
Yes, thank you very much, Sarah. Yes, it works. Thank you very much. And very good to have you here now listen to the experience of Colombia. And a big welcome to our panelists on the screen. Buenos días para ustedes. And thank you for just attending online, even in this setting. And please feel free to raise your hand so I can see it. But we will try to make sure that this hybrid panel is well integrated. Sarah already introduced the panel, so let me just jump right into the discussion in the interest of time and have the exchange started. So welcome again to the panel. It's really the pleasure for us to have you here. Now, what we really want to find out from you in this panel is answer some of those questions that were raised but not really answered in the previous discussions. What makes you cross that kind of set of barriers that's between an investor and an investment opportunity in an emerging market? And we have a couple of you from the investment community, and then we have also some other viewpoints. But if you allow me, maybe I will start with Cipriano Lopez from Bancolombia. Bancolombia is the largest private bank in Colombia, and you made quite a commitment to sustainability. But I'd like to understand from your perspective, just from a practical perspective, how did you come across the investment opportunities and the SDG investors map in Colombia, and what was your thought when you saw the investors map and the opportunities? If you can just give us a little bit of a glance inside your thinking process as well.
Sure, and thank you very much for this invitation. It's for Bancolombia something relevant you have here on this conversation. Something that is the first one is our commitment. Our purpose is really connected with the SDG agenda. And for us, it's something basic because we understand that in a better community, in a better society, full of opportunities for everyone, connected with a better natural capital and social capital, economical capital, and human capital, we could be developing better businesses for our customers and generating that, and we could generate better value for society. All of this is relevant, and when you are investor or you are financing the economy, you need to understand clearly where are the opportunities. And the investor map offer to the investor market this overview, this advice about which kind of opportunities are involved in different countries, and the main opportunities in developing countries right now connected with the SDG agenda. Colombia is a country full of possibilities with a large variety of activities needing investment to improve the quality of life of people. And in 2019, we were invited by the UN Secretary to participate in a UN initiative, Global Investor for Sustainable Development, GISD Alliance. At the GISD, we worked together with other 29 private sector leaders contributing as business leader with insights and advice on removing impediments and implementing solutions for scaling up and long-term investment for sustainable development. And the SDG, in fact, map will be crucial on this task. And we are so glad to see the map for Colombia because it shows several initiatives which are opportunities to continue working towards mobilizing capital for sustainable development. From Bancolombia point of view, the investment opportunities identified in the map are aligned with our sustainability pillars according to our corporate purpose to promote sustainable economic development to achieve well-being for everyone. And in the map for investors, this is something really interesting because we highlight investment hubs and industries aligned with our corporate strategy and the way we contribute to society as a bank, as investors, strength agriculture, financing SMEs, technological reconversion of companies, low carbon, mobility, access to housing, decarbonization of the economy, financial inclusion, and female entrepreneurship, among others. This is something relevant and is why Bancolombia is connected with this agenda and why the investor map is something relevant for us.
Thank you very much, and that gives us a really good overview from the banking perspective. And with that, I really want to go to you, Tim, from an investor's perspective. You've heard these discussions of, why are investors not jumping? And we also heard that there's a bit of a herd mentality. So once the first one goes, everybody goes. So what made you go into Colombia? What was the trigger for you to invest, and what were your hesitations, and how did you overcome them?
Thank you, and it's a pleasure to be here today. First, I'd like to disclose a personal conflict of interest because I married a Colombian last year. I love the country, and I'm sure she's monitoring this conversation, so I'll have to say good things.
Are you suggesting we need to look for these personal connections to boost the investments?
No. In fact, we had decided at Alpha Mundi to make Colombia a key country of operations and investments for us in Latin America much before that. This is for a number of reasons. The first one is that you find amazing talent in Colombia, right? Very seasoned professionals, and you can build good investment teams as well as good enterprises with good leadership. The second one is that the country is very well connected to most of the other countries of the region. And of course, as a regional hub, that is a key consideration. The third one is that you have a number of positive features if you look at the macropolitical, macroeconomic trend in Colombia, but also have to mention risks as well. On the positive side, you've got strong economic growth. This year I think we're looking at 10% growth of GDP. Next year we're anticipating around 4%, 3-4%. And you have all these wonderful initiatives. Thanks to your investment maps and the collaboration of the local government and the local financial industry, there is very genuine effort to mobilize capital for sustainable development solutions. In 2012, the Colombian Banking Association entered into an agreement with the government to green its portfolios, for example. And this has been going on, and today about 2% of banking portfolios in Colombia can be qualified as green. You have this Colombia Herencia initiative, which was announced, I think, in October by the current government to protect 10% of the of the country's territory from an environmental perspective. So you have a lot of positive things going on, but Colombia is also a country with massive challenges. You've got 50 million people, and of those 50 million, between 8 and 10 are internally displaced because of decades of civil strife. There was a peace agreement, and that was, by most people's standards, a good thing. But still, there is guerrilla, there is uncertainty, there is insecurity in many areas of the country. Some regions are not properly supported by the central government, and so you have extreme poverty in these regions. You have a country that's also very generous despite all these challenges. There's about 2 million refugees in Colombia, most of them from Venezuela. And recently, incredibly, the government gave a residency visa and the right to work for for more than half of these refugees. So we see the investment map as a perfect tool, really, and we thank the UNDP for producing it. We hope this will become much more common as a benchmark of reference for investors investing in emerging markets. Now, to answer your question on risk perception and real risks, it is true that if you look at impact investing in general in emerging markets, the industry has delivered on the risk-adjusted returns that it had promised over the last 12 years, according to multiple industry surveys. And we have noticed that in general, institutional investors have a much higher risk perception than what the actual risk is. This is primarily because they're not familiar with local conditions. And if you want to invest in these countries, my first advice is to make sure you have a local investment team. In our case, all of our team in Bogota is Colombian. The other thing is that you need to look at macropolitical and macroeconomic risks together with social and environmental at the enterprise level. And again, your report highlights a lot of these factors. As you know, next year there will be a presidential election in Colombia. This is always a time of higher volatility for every emerging market, and Colombia is no exception. And I think it will be interesting to see what is the next chapter that's written by the next government. But nonetheless, there are incredible opportunities for sustainable investments with either an environmental impact or a social impact in Colombia. In our case, we've had very successful investments historically in Colombia, and Latin America in general represents about 50% of Alpha Muni's investments over the last 12 years. We've invested about $100 million in total in companies in emerging markets. So I hope that's...
No, thank you very much, Tim. I think this gives us a little bit of a glance of the process and how you get where you are. Perhaps, Cedric, you can add to it from your perspective, and if you can address a little bit also the risk element. How do you kind of attack or tackle that problem, and how do you get then to the end of investments?
Many thanks. Thank you for your very good and complete overview. What I can say to the respect, same no. So we also have an office there, not in Bogota, but in Cali. Also a local team. And the risk is the key. No? So I guess you gave some very concrete elements about the risk, giving a step downwards. In the end, it's lack of knowledge about a specific environment. Some bad experiences. I've seen many investors, and they always relate to one investment they did in Uruguay or in Colombia or wherever in the region that went bad. And so that's the reference. So it's to go above this kind of consideration. But in the end, the biggest break is the lack of knowledge. So all those elements that you mentioned, I guess, are obviously part of the analysis. And now going down to the companies, because in the end, it's what comes out of the survey, the opportunities. No, ideas, and in this world of impact investing, ideas, there are many and gorgeous, phenomenal. proposition to save the world, no? And that's good. But a good idea doesn't necessarily make a good entrepreneur, even if he has a lot of passion. And to make an idea a good business is something complicated. So in the end, the risk lies not in the good idea, but in the good implementation. And it's true, as you say, no, that there are many examples of success, examples of great ventures, but there are also failures, as it is in life, no? And so the cherry picking, well, is what it's all about when you have to invest, no? How to choose the winners, how to ensure that those good ideas will become good companies, and in the end, that's where the complexity remains. But again, well, I guess the experience has been good when in our case. And I think, well, we were born at the same time, not 10, 11, 12 years. We are much more focused on Latin America than Alpha Mundi is with Impact Finance. We've lent 240 million to impact projects. And well, in Latin America, we have something like 75% of our portfolio. And Colombia has always been around 20% of what we had.
Thank you very much. I mean, you both mentioned the information gap and so forth, and how important it is to have the local knowledge and the local office. So I'm just curious, Tim, did you have the investment decision before you set up the local office, or you set up a local office to feed your investment decision?
That's always a chicken and egg. Yeah, we were very interested in investing in Colombia, but we felt it was helpful to have local boots on the ground before going into the companies. And we did the same in Africa as well. I think in any emerging market, you need to have local presence to do your due diligence, and then to monitor the investment, monitor and manage the risks. So yeah, we first hired the team and then made the investments.
Thank you, and I think we can segue then perhaps to you, Christina. You have been watching the corporate world in Colombia for a while, building public-private partnerships from the Chamber of Commerce perspective as well. What is your perspective on what you've heard in terms of the challenges and opportunities in Colombia, and what can we all do collectively, and what should be done to attract more?
Well, thank you very much for inviting me and for giving me this opportunity. I'm currently in one of those turning points in life in which I can speak freely, because I'm about to start working as Dean of the Business School at EAFIT, a regional university in Medellin. And I don't have a current institutional compromise, so I can talk freely about these subjects. And I think Colombian big companies have been working on having ESG standards for a while, and they have all the incentives to do so. And if you see the corporate tracker, the SDG corporate tracker that Director Botero was talking to us about a couple of minutes ago, it is evident that these companies are starting to report what they do in terms of complying with the SDGs, in terms of defining specific projects, and in sort of balancing their more financial objectives with their sustainability objectives. And that is something that is happening in Colombia. And we have a sort of like a very interesting movement of activist CEOs in a way. Bancolombia is one of the examples, and you can see examples of the sort in the entire ecosystem. But the reality is that over 65% of the national, of the formal jobs that are produced in the Colombian economy are produced by SMEs. And SMEs are over 95% of the total number of companies in the country. And we still have a huge gap in having sort of in linking these efforts big companies are doing with what is happening with SMEs. And I think that's not only a challenge in terms of public policy, but it's also a great opportunity in terms of investment. These medium-sized companies, small companies with projection, could use investments linked with with sustainability goals, with sustainability projects, and I think that's a huge opportunity. I currently advised one of Colombia's most loved companies, Procafecol, the owner of Juan Valdez. You probably have seen it. It's our national, one of our national symbols. And they developed a project in which they started to chain small woman-owned farms with big providers, paying a premium price for the coffee that was produced by woman-owned farms. And it started as a really small project, a really conservative project, and they saw, well, they sold the stock they had for the semester in less than a month. And you can see that these type of examples in which a big company that has a clear vision of SDG goals, that has a clear mission of linking their financial KPIs with sustainability KPIs, helping small businesses thrive and start sort of like helping small businesses define sustainability goals is really the way to go. And it's also a huge investment opportunity. And we saw it as they sold the coffee they had prepared for a semester in less than a month. So that's my contribution to this discussion. Thank you very much.
Thank you very much. I want to come back to all of you on the partnerships and see, what roles in this ecosystem that we had been discussing before needs to be strengthened, and what are, some of the unblocking elements that can be brought in. But I really want to have this more, as a conversation from the audience, so that you answer their questions, not so much my questions. So we'll break it up and just open the floor before we go back to you on that one. I see you want to come in.
Should I need a mic? Or?
Eventually, but speak up and I will repeat it for the sake of the... Oh, you're getting it.
Yes, thank you so much for the presentation. No, I have a question for all the speakers. I was wondering if you had in mind key industries or key areas of investment we should focus on, if it's either education, clean energy. Obviously, there's many more, but if we speak only about Colombia, what key areas are we talking about here? Yeah, thank you.
Thank you. Maybe we can take a couple more for the panel to have.
Good afternoon. I'm based in Geneva. We have a company here, and we work with a supplier that's in Colombia. They are quite big. They're Muso Emeralds. I'm curious to see how we can work together with, this is a specific industry, quite a large one, and how that can be, the SDG goals can be implemented in the value chain, because it's kind of an industry, but at the same time, it's a product.
Thank you very much. Maybe we can take one more and then we go back to you. So if you can just think in the meantime which one you're going to take. Yes, please.
Yes, good afternoon, Benoit Angelbach from Orange Company. That's more a question for investors. Cédric, you've talked about lack of knowledge in the local countries. So you said that for investors, that's particularly important to have local teams in order to evaluate the risk and find opportunities. But UNDP has developed this investment map. What kind of knowledge could be shared more globally before building a team in a country? Which kind of knowledge could be shared? And of course, I guess investors, they won't share all their deal flow, for example, all their knowledge. So what the limits that could be a kind of common information for SDGs? and of course the limit of what is your business.
Thank you very much. So I think we have 3 very specific questions. So if you can just indicate if you're ready to come in, you can just put your hands up on the screen or the panel here. Tim, you're ready to come in?
I can answer part of the first question, I guess. So, Colombia has a number of key sectors. These key sectors are very well defined in the SDG map of the UNDP, so I encourage all of you to take a look at it. It's very clear, and it's a quick read also. It's not a Bible. And what we've focused on is really a couple of very fast growth areas where you look at sustainable food, which is linked to primary agriculture production, but also to ag tech and climate resilience. I think that's a very promising field in Colombia, given how fertile the country is and its diverse topography. Another one would be renewable energy, which so far hasn't really hit the mark in Colombia. You've got about 5 megawatts of installed renewable energy capacity that represents, I don't know, maybe 3-4% of the country's total generation. And so that's something that really have a lot of room for growth. And if you look at the financial inclusion space, of course, we have the traditional microfinance and the agricultural cooperatives, but also fintech is booming in Colombia. It's really becoming a tech-driven component of the industry, and I would recommend to investors taking a look at that industry. Finally, on a more personal note, I'm very keen to protect the environment and natural resources of such beautiful countries as Colombia. So I think anything related to waste and water management, plastic recycling, and that would be really welcome in Colombia. There are some rules that are coming into force or have just recently come into force on that front, but the industry hasn't moved yet and the capital has yet to follow.
Thank you very much, Tim. And I see from Bancolombia, Franco, you want to come in, so over to you.
Thank you very much. And on this comment, I was talking about our commitments of the SDG agenda, and I want to remark the different industries that we are right now supporting that many of them have really clear connections with the SDG agenda. We are really close to different industries, and I want just to repeat many of them. The agriculture, connected with the agri-tech, and connected the value chain. Christina was talking about one specific example about the coffee industry. But Colombia has different opportunities in different kind of crops and different kind of industries, but connecting the rural areas where many SDG aspects are really, really relevant and important on these places, because you know that by the conflict during the decades in the country, we have really an important opportunities on rural areas. How to connect agriculture, agri-tech, new technologies with a market with more knowledge and more aware about the quality of the products. This is one of a big important aspect and sector for the country. Secondly, obviously, the SMEs and how we work with SMEs. In Bancolombia, at least 1,700,000 SMEs are customers of the bank, and we are supporting them each day. But we are trying to identify which kind of activities they are developing, because if their activities are connected with the SDG agenda, we are supporting them in a different way with better benefits in order to achieve their goals. Technological reconversion is something relevant in order to increase the competitiveness of our economy, and many aspects here are connected with the new technologies that we could involve it, reducing CO2 emissions or generating more efficiency in energy or water, or other aspects that are linked with the SDG agenda. We have in the country really huge opportunities on this. And the female entrepreneurship, the 50% of the companies in the country are created by women. So in that order, how to support women is something relevant for the country and something relevant for Bancolombia. And finally, the climate agenda. We are supporting the transition of the big companies, but as small at the same time, because there are really, really huge opportunities connecting resources with a better performance of CO2 emissions, for example, or how to promote the net zero agenda in the country, because many companies need really important investments in order to incorporate new technologies. And this is something interesting, relevant in companies with really good performance in ESG indicators, or in ESG, with a good ESG rating evaluated by different companies. Standard & Poor's, Fitch Ratings are offering to the market different information about that. For Bancolombia, finally, our commitment on this is just invest at least $140 billion during this decade. It's huge opportunity for the bank, is twice the assets of the bank, and at the same time, we have here opportunities for international investors using our funds as the channels in order to reduce their risks and at the same time invest their resources with impact on these kind of activities. This is something connected with which kind of sectors, opportunities, commitments, and why this is a nice opportunity for investors in an agenda that the government have defined, are defining for the next 10 years with really nice opportunities in reduce the gas emissions or implementing new technologies, and how to combine this with an interesting aspect here, biodiversity and biocommerce. This is something huge, and nature-based solutions in order to offer into the global market opportunities for offsetting their impact on climate change. This is all very specific aspect with huge opportunities. Remember that Bancolombia is the second country in biodiversity worldwide. How to use all this capital in a good way with sustainable practices, and how implement this and offering different kind of solutions for a market that is looking for. Thank you very much.
No, thank you very much for that very kind of rich perspective. And I see, Christina, you want to add to it. Over to you.
Yes, thank you very much. So I would like to start with the second question and then go back to the first question. The mining sector is one of the most complex probably sectors in Colombia and probably everywhere else in the world. It faces huge rates of informality, huge rates of illegality even, and big formal and legal companies have been very serious in defining ESG agendas and being part of initiatives such as the SDG tracker because they know they have a lot at stake. So I do think working with these type of companies is sort of like a way of starting or a way of affecting positively what is happening in this very complicated sector. So I do think it's an opportunity. It's complicated, it's risky, but it is a place where there's a lot to do in terms of sustainability, social sustainability, environmental sustainability, and the comprehensive idea of sustainability. And in terms of key industries and key sectors, I think particularly Bogota has become a hub for tech companies that are either starting to do their programming work in the country, in the city, and the city government and the national government are investing a lot of money in having qualified people, and we still have a huge gap, but we're getting there, and it has been attractive for big transnational corporations such as Tech Mahindra that has just installed their hub for the region in Bogota. And specifically, I wanted to talk about two funds that are working in terms of investing in women-owned companies and women-owned businesses. One has been focused, and I'm going to send you the information. One has been focused in tech companies and sort of like the traditional startup companies, but the government has recently partnered with private investors to develop a fund to fund women-owned initiatives that have social impact. And one of the problems has been finding projects for these funds, and they're starting to invest with resources from USAID, from even the UNDP and different corporations, different international corporations. They're starting to invest in the capabilities to define interesting projects for investors, and I think that's going to open a new window for international investments. It's not a huge investment, but it's more like a small, diversified, which also means less risk investment only in women-owned businesses.
Thank you very much. I think we still have a few more minutes, but if you want to add something, then we can.
I wanted to answer on your question on emeralds, and well, since you named me, I'll try to answer to you. So on mining, I guess Christina said, well, the very interesting sector it is, because it's terrible, no? But I think things can be done, and things can be done well. The first investment we made was in a gold mine, and we have been working with this initiative of the SECO and some Swiss refiners called the SBGI, the Swiss Better Gold Initiative. And I think there are criteria that can be tracked and SDGs that can be translated into measures that are very positive. This all work we did, first being a co-founder of SBGI 10 years ago, and continuing with this gold, ended up a month ago or so in the creation of a financial fund, buying better gold, and where basically the characteristic is the full traceability from the artisanal miner to the customer. And along with this initiative, I've seen a project in Colombia, in Choco, which is the first, biggest, and only initiative along with alluvial platinum, because this region, along with another region in Ethiopia, is the only one to have alluvial platinum, and where it's exactly the same story. Who extracts, how it extracts, how can we recover and regenerate the soil that are destroyed, what do we do with the mercury, and so on, and then to see the full value chain, because obviously who buys it is crucial. And with the gold, we really saw it. If you can sell directly to Switzerland, at least you avoid to have 20 intermediaries that buy it at a higher cost or same cost as the bullion market, but washing. I think bringing transparency along the value chain is really the key, and it's what is valued obviously by the consumer, the same way they value fair trade coffee and so on. So that was the first. On your question, what can UNDP or where can UN or whoever still help? I guess it's really there are aspects that are difficult for a foreign investor when he comes in. I would say one is absolutely crucial. It's the legal. What is a contract that's worth? How do I do it? What kind of guarantee? How do I register those guarantees? If I lose my loan, how do I get my guarantee back? And those are elements that are there, but obviously, there might be a law. Sometimes it's not very well applied, or it's very slow. How can I accelerate a legal process? In general, in developing countries, the institutions are weak, and maybe the weakest is the legal one. So there, the state or the public authorities and to bring more information, and I think that would be something that would definitely help. and I leave it here.
Maybe thank you for that comment. There is a process called the Kimberley process, which is quite well known on the timing side of business, and it might be interesting to look into applying that into Colombia because it's actually well organized, it's global, it's quite a great framework. The other thing, I'm a partner of a software called Position Green. This is a software company, it's actually Swedish. And with this, we can do metrics and measurements of the actual impact done. So I would like to challenge maybe the guys, and maybe we can have a discussion afterwards in Petit Comité to see what can be done on that particular challenge.
Thank you very much. We're kind of running to the end of the session. So I'd like to just go back to our panel then, and maybe if you can give one or two sentences, especially focusing on the partnerships. What have you learned from this process and being part of the investor landscape in Colombia that you think could help basically unlock the financing globally? If you have some advice on the partnership elements or anything else, that could be a good way of closing up this session. Don't know who would like to start. Maybe this time we start with you on the final comment, Cedric.
Well, I guess how to bring the herd. Well, we need to be beautiful. Well, I think this impact investing thing, the SDG thing, is a process where we need information, opportunities, a responsibility, obviously on either parts. I think the diffusion of those SDGs has been an amazing catalyst for entrepreneurs to realize that their enterprises might have a measurable impact, or has a measurable impact that they never realize or saw. So I guess it's there. No? It's not a process that goes fast, because as we say, no, an entrepreneur, we are not born entrepreneurs. Maybe that was the dream of the microfinance at one point, but we are not born entrepreneurs. It's complicated to build a company. And so it goes slow, but it goes. And well, in Colombia, I remember when we arrived, that's not that long, in 2013, well, nobody knew what an impact was. And I remember approaching a company that one of the first, well, you know them well, no, Terra Fertil, a company that, well, in 2017 or has been bought by, or 18, has been bought by Nestlé, and they. Well, they didn't know what impact was, where they were buying golden berries, two smallholder farmers, in a huge manner, and bringing change. So I think, well, that's my say.
Thank you very much. Christina, what would be your advice to the market overall based on from what you have seen in Colombia?
I'm going to go back to my initial point. Most investment funds focus in big companies. That's normal. It's expected. But the biggest impact, once you do that link, is to focus on how these big companies are chained with small and medium companies, and how these small and medium companies have started to appropriate the sort of like the SDG discourse in their day-to-day lives and starting to implement ESG indicators in their operations, and that would probably be the biggest impact, the biggest social and environmental impact you could have with your investment. So that would be my final conclusion, and thank you very much for this invitation.
Thank you very much. That's very practical and insightful at the same time. Franco, what would a banker suggest for the way forward? I think you may be on mute. We can't hear you.
Sorry, yes. The first aspect here to understand and be clear is that investors are different, and they are looking for different kind of risks or different kind of activities, different kind of territories or locations. And in that way, Colombia is an interesting, area of investment for investors in different aspects, because the economy is stable and has an interesting behavior during those different of the last months, and with interesting at the same time budgets about the performance for the next year. Secondly, but Colombia and the government has an defined agenda in the SDG aspect, linked with impact, linked with the investment from public sector, and how the state will be supporting, and the government will be supporting different sectors in making their transitions. This is another important aspect here, because are defined actors and sectors are renewable energy, green mobility or electric vehicles, affordable housing, but sustainable house at the same time connected with the climate agenda. Colombia has a huge commitment with this NDC in order to reduce the 51% of the CO2 emissions. This is huge, but at the same time, our opportunities involved for 9 than 8 sectors making their transitions, and they need obviously resources for different actors. Investors are one of them. And finally, all of this agenda is huge worldwide, more than 50% in order to achieve the commitments linked with the SDG agenda, depends from private sector, depends for investors. It's something relevant because it's not philanthropy, it's a huge range of opportunities in different aspects that maybe need more innovation, creativity, how to involve in the first steps, for example, the blended finance concept in order to define and implement different pilots in the regions, and how to mobilize new resources in order to accelerate and scale up the solutions. Finally, Colombia is a good place to invest with different aspects that are really important and relevant for investors, and in the next decade will be really, really important in the climate agenda and showing to the world how to achieve the goals with a perspective of business and profitability, but connected with a better impact and social impact for many people in our country and other countries close to our region. Thank you very much for this invitation.
Thank you very much. So Tim, if I may turn to you for the final words of wisdom from this panel.
Sure. First, I'd like to rebound on what we heard from Bancolombia, because I think blended finance is a fantastic vehicle to help investors come into a new sector or market at a de-risked level, and then grow more familiar with the market, and ultimately they stay in the market and increase their commitment after you've taken away the blended finance component. This has been very successful in multiple markets, and certainly today, if you look at impact investing broadly, most of the capital in impact investing products, funds, initiatives is still coming from Europe and the US. So my first wish would be that we start reinforcing local capital systems so that most of the solutions ultimately can be financed by local investors. But until that happens, we need to have the support of the public sector and philanthropic organizations to help de-risk impact funds and other types of vehicles that can channel money to countries like Colombia and invest in SMEs. I'm happy to report also that this week our portfolio company Simply launched the first credit card for small enterprises in Colombia, first in the country's history. And I think that making debt financing more agile for small enterprises, to Christina's point, is absolutely key. And of course, with technology and digitalization and blockchain, you can really track the best performers and reward them with bigger credit, longer term credit, cheaper terms, etc. So it's very healthy for the financial sector overall. I would like to finish with an invitation as well. In April of next year, Latimpacto is going to be organizing its first in-person gathering in Cartagena. And we suggested to create to organize a co-creation workshop to design investment solutions for Colombia and the region. And there'll be a lot of key stakeholders there. I hope that our Colombian friends will be present as well. Bancolombia espero que estarán presentes. We'll have the support, of course, of Colcapital, which is the Association of Venture Capital and Private Equity in Colombia. And they're doing very interesting work as well, because they are helping create a national advisory board for impact investing in Colombia. And ultimately, that will help channel resources from those with capital in Colombia. Maybe one point, we still have an imbalance that is structural in Colombia, right? Because you have the 10% of top income earners in Colombia capture 40% of the GDP. The lowest 20% of income earners only receive 4% of the GDP. So if we can find a way to redress that social inequity over time, that would be amazing. You still have 40% of the population that's below the poverty line, and about the same percentage that is living in inadequate housing, right? So I didn't mention it before, but affordable housing could be a very interesting thing. Now, until that happens, we need to create vehicles that can be attractive to those with capital in Colombia, and that can be redistributive to a certain extent for a more sustainable future for the entire population of Colombia on attractive risk-adjusted terms.
Thank you very much. And with that, I think we will have to conclude this panel. But thank you very much for both of you online for joining us and to join us in person as well. And one of the things that we would like to do is essentially move this conversation forward after this week as well, and especially link it back then to the entrepreneurs and hear from the entrepreneurs, not only their pitches, but that kind of experience and how we can then replicate it and scale it up in other places. So thank you very much again, and I hope that all of you enjoyed this panel. And with that, I'll hand back to Sarah.
On this note, I'm sad to conclude the 5th edition of the SDG Finance Geneva Summit, but hopefully we'll meet very soon. We've heard that there are many challenges, but also we've heard about solutions and opportunities to increase the impact we can have on the ground. As Aggie says, there's so much to be done. And I would invite you to reach out if you want to help us widen that journey in Colombia, but also in other parts of the world, because we plan to expand that process and working with the ecosystem in other parts of the world. Thank you so much.